Welcome back to The Bull versus the Bear. Today, we're diving into Uber, a stock that has been an absolute monster for investors, but just slammed into a pretty serious speed bump. We're going to break down both sides of the argument, the bull case and the bear case. So, let's get right to it. First up, to really understand the bull case, you have to look at this number. Over the last 3 years, Uber stock delivered a staggering, and I mean staggering, 217.8% return. That's the kind of performance that can make a portfolio, making it a favorite for a lot of growth investors. But, well, the story just got a lot more complicated. Because right after they released their latest earnings report, the stock dropped around 7% in a single day. So what on earth happened? You've got this massive long-term winner that suddenly gets hammered by the market. This right here, this is the conflict we are going to unpack today. Okay, so this is where it gets really interesting. If you just glance at the top-line numbers, everything looks amazing. Revenue's up 20%, gross bookings up 21%. They did a record 3.5 billion trips. But then, you get to the bottom line. Operating income missed what analysts were expecting by a whopping 31%. And that is what sent a shockwave through the market. So that leaves us with the big question, right? Is this just a temporary stumble for a growth machine that's now on a discount? Or is this a major red flag that's pointing to some much deeper problems under the hood? To figure that out, we've got to look at the two competing stories. Let's kick things off with the bull case. The argument here is pretty straightforward. This recent drop is a massive overreaction. The bulls believe that if you just look at the fundamentals, Uber is a deeply undervalued growth machine that's basically hiding in plain sight. Now, to really get the main argument from the bulls, we have to quickly talk about a valuation tool called discounted cash flow, or DCF. All you really need to know is that it tries to figure out what a company is worth today by looking at all the cash it's expected to make way out into the future. It's kind of like a financial crystal ball. And here is the big payoff. According to a DCF analysis from Simply Wallset, Uber's fair value is over $168 a share. When you compare that to its current price of around $94, this model is screaming that the stock is about 45% undervalued. For a bull, that isn't just a small opportunity, that is a massive flashing green light. And it doesn't stop there. Take a look at Uber's price-to-earnings ratio, which is basically a price tag that tells you how expensive a stock is compared to its profits. Uber's is sitting at just 11.5. The average for the rest of the transportation industry, 26.8. That means Uber looks incredibly cheap compared to all of its peers. And to really hammer the point home, just listen to the CEO, Dara Khosrowshahi. He's not talking about problems or excuses. He's out there saying growth kicked into high gear. For the bulls, the message couldn't be clearer. The business is firing on all cylinders, and the valuation models are saying the stock is an absolute bargain right now. But now we have to flip the coin and look at the other side. The bears are looking at that very same earnings report and seeing a totally different picture. They see a story full of costly surprises, shrinking profits, and some, let's say, questionable signals from the people who know the company best. At the very heart of the bear case is this number, a surprise legal charge of $479 million. For what? Undisclosed legal and regulatory matters. This thing just appeared out of nowhere and it completely blindsided Wall Street. And its impact was huge. Remember that 31% miss on operating income we talked about a minute ago? Well, this charge was the main reason why it happened. The bears argue you can't just brush off a nearly $500 million surprise. It raises some serious questions about what other risks might be lurking. And here's another layer to the bear argument. Uber's operating margin, think of it as how much profit they actually keep from each dollar of sales, took a big hit. It dropped from over 11% down to just over 8% in one quarter. And this wasn't just because of the legal charge. It was also because they're spending a ton of money on new projects. Think big bets on AI and self-driving cars. For the bears, this suggests the path to higher profits is actually getting more expensive. Okay, now this might be the most powerful point in the entire bear case. While the CEO is publicly saying things are great, he and other top execs have been selling massive amounts of their own stock. In just the last 6 months, the CEO sold over $43 million worth. Other execs have also sold millions. So the bears are asking a very simple question. If the stock is such a great deal, why are the insiders cashing out? And the final nail in the coffin for the bears is the company's own forecast for the future. Management's guidance for the next quarter came in just a little bit lighter than Wall Street was hoping for. It wasn't a total disaster by any means, but it was just enough to pour some cold water on the excitement and add a little more fuel to that bearish fire.
All right, so we've heard both sides of the argument. You've got this powerful growth story on one side and some very real, very serious concerns on the other. Let's zoom out for a second and put these two clashing stories side by side. So here it is, the whole debate in a nutshell. The bulls are screaming that the company is fundamentally undervalued, pointing to things like the DCF model, its low PE ratio, and those record-breaking trip numbers. But the bears are firing back, pointing to that scary legal charge, those shrinking profit margins, and maybe most importantly, all those top executives selling off their stock. We've laid out the facts for you, the facts from both the bull and the bear camps, all based on the latest reports and analysis. So now, the call is yours. So what do you think the real story is here? Is Uber an undervalued growth machine that just hit a temporary pothole? Or are the bears right to be worried about rising costs and all those insider doubts? We really want to know what you think. Drop a comment below and tell us which side you're on and why. And hey, if you enjoyed this breakdown, you know what to do. Make sure you subscribe for more deep dives from the bull versus the bear. Thanks for watching.